Are we close to having stagflation?
Yeah, we are in stagflation.
We are.
Hello guys, welcome back to Christian Finance for your regular financial content. And today we're going to be reacting to one of the legendary investors, Ray Dalio. If you're even 5% into the space, you know exactly who he is. So we're going to go over what Ray thinks is going to happen in the short to midterm in the markets. I'm going to give you my honest opinion, what I think about what he's saying. I'm going to go over what I believe will happen in the short to mid to long term.
Are we close to having stagflation?
Yeah, we are in stagflation.
We are. Stagflation is simply where, you have inflation, and yet at the same time, you have high unemployment.
That's exactly what's going on. We're literally in stagflation as we speak. So as right here, as we can see, the past 8 months we've been averaging from 7.9 all the way up to 9.1%, which is more or less inflation at a 40-year high, right? So this is the first metric of stagflation, obviously high inflation. And earlier this year, even though the Fed won't admit it, we had 2 consecutive negative quarters of GDP, which by definition as of this moment is a recession, right? If the Fed doesn't want us to say that we're in a recession, they should really change the definition of it. And honestly, there's a high likelihood that they will.
You have economic weakness.
Right.
In other words, you have a stagnant economy. Essentially
meaning
means
growth is reduced.
Low growth. And with high inflation.
Yeah, I mean, he just reiterated what we just explained. High inflation with low growth in the economy. But those are only just a few of the issues going on, right? We also have an increasing of interest rates, which, trust me, it's not helping. Some experts are saying we may hit up to 5%. In my opinion, we're going to go up to 4%. We'll have to wait and see exactly what happens there. Also, we have the war still looming around. That one's affecting a lot everywhere, especially in Europe. The pandemic is still happening on and off at certain places. And in my opinion, one of the scariest things going on right now is that the 2 companies when you would expect to do well when the economy is not doing well, so Walmart and Target, they actually were reporting a surplus of supply. And that's scary when the 2 cheaper alternative stores are reporting surplus of supply in a downturn economic time. That is not good. Okay guys, I want to take a second and ask you if you're enjoying the videos, like it. And if you're finding this content beneficial and you want to get regularly updated on what's going on, subscribe to the channel, hit the notification bell, so this way you guys get notified every single time I upload. And once again, to show me your support, just subscribe to the channel. And right here we have a classic from Michael Burry. Obviously he predicted a 2008 housing market crash, benefited quite heavily from it. So he's definitely someone that a lot of people look up to in the financial space. And right here he says, and I keep getting asked when crash. So essentially what he's referring to is that back in June, when we had a 1-year low in the Dow Jones, and then we had a rally coming back up, everybody thought this would be the bottom, right? But now obviously crashing much harder than we were initially back in June. And not financial advice, do your research. I personally believe we're going to go even lower than this low in October. It's based on previous videos you guys seen what I believe, and that is that we're not going to go anywhere towards all-time highs until midway to end of 2024, right? And then, yeah, I mean, right here we have Bitcoin, which was arguably hammered the most. Obviously, it's a risk asset, and in downturn economic times, those are the ones that get hammered the most. And in upward trending markets, those are the ones that rise the most, right? But a year ago, it was worth $69,000, and now it's worth pretty much a quarter of that, right? Which is absolutely crazy. And yeah, I don't think we're going to be hitting anywhere near all-time highs until 2025. And I do believe here we're going to be heading lower. This Mike Burry tweet should crack you up a little bit. It's all about when Dow Jones went down by 522 points in a day. And the chart really did look like a heart attack. And really one key metric that helped me out a lot to really just be able to predict certain stuff was about a year ago we had Elon Musk and Jeff Bezos sell quite heavily from their respective stocks of Amazon and Tesla. And you know when the big billionaires are starting to sell a bunch of shares from their companies, you know trouble's ahead, right? Mark Zuckerberg did the same thing about a year ago too. He was selling as well. So that's a metric you guys should be looking at in the next bull run. When these guys decide to start selling, you know it's a good time for you guys to start dollar cost averaging on the way out. I do want to remind you guys one thing, that yes, as bad as the factors are right now, and I named a lot of bad things going on, what happens is everything runs in cycles. We're not going to be downward trend forever, just like we're never upward trended forever, right? It's always going to switch. And the main thing I want to remind you is that most millionaires and billionaires are made in recessions, right? It's right now that the smart people that have a lot of money on the sidelines are jumping in stocks, in cryptos, in real estate, when everything is on a downward trend. And then when everything's coming up, that's when they're either going to be holding or selling. They're not buying at peak prices. I promise you that. This is it, guys. I want to ask you to like the video, to get the regular financial content, subscribe to the channel. Let me know other similar content you'd like me to do next in the financial space. And as always, guys, stay diversified.